What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about in today's video is USDCHF. Now, why do I want to speak about USDCHF? Because this pair is very near to providing to us a good trading opportunity. So I want to give you guys a full breakdown of the situation that we currently have to show you where we can be looking for the next potential opportunity. And as usual, I will be keeping this analysis as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are currently doing in the market, and by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probability setup here on USDCHF. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we have a market which at the moment is testing an extremely strong monthly structure area. In fact, this zone was acting as very strong support here, again support here, again support here, and we can see how the market has just broken below this extremely strong monthly support here with this impulse to the downside. At that point, all the previous support is turned resistance at this area. And we can see how the market has just tested this extremely strong previous support, which is now turned resistance, creating a strong rejection to the downside. Now, after this, what we can see is that the market has once again broken above the structure resistance. And after the break, this previous resistance is now once again turned support. So here in the monthly time frame, we have a very strong historical structure level for USDCHF, which the market has just broken to the upside and is currently retesting. And since this level is currently acting as support, there is a good probability that we will see USDCHF create a rejection to the upside away from this area. Going down on the weekly time frame, what do we have? Now here in the weekly, price action is quite clear. We can see how in creating this impulse to the upside, the market has printed two candles of a different color, which are exactly these two red candles here. Meaning that inside of this extremely strong bullish move, the market, when it hit this area, it did find resistance. So this area that was previous resistance and supply, now that the market has broken it to the upside and is currently retesting it, is acting as support and demand. So we have a good probability from here to see the market reject this demand area to the upside. So here in the weekly, price action is quite clear. We can expect the market to provide a rejection to the upside. Going down on the daily time frame, what do we see now here in the daily? I had spoken about USDCHF after the market provided this overextended W formation. I made a full breakdown explaining all the reasons for which we expected the market to create a move back down, to retest this previous resistance turn support and complete the pattern at the neckline. In fact, generally speaking, after the creation of an overextended W formation, you do expect the market to provide a move to the downside to complete the pattern at the previous resistance turn support. And in fact, we can see that that is exactly what the market just did. The market went back down, completing the pattern at the previous resistance, now turned support. If you have any questions or requests for the next videos, make sure that you leave them down in the comment section below. Also, make sure that you smash that like button and subscribe. Now, here in the daily time frame, we can also notice that the market has just provided an overextended M pattern. And after the creation of an overextended M pattern, what you want to see is the market create a retracement at least to the 0.382 of the Fibonacci taken on the impulse leg. Now, before I show you how we can be approaching this potential longing opportunity, and before I show you the full educational breakdown of what we have here on the daily time frame, let's first go and see what we have from a COT perspective. So commitment of traders, which is what hedge funds are currently doing in the market. Now, here on the CHF, what we can see. Now, first thing to say, all currencies on the spot are traded against the USD. So if you check the data for the CHF, you're actually checking CHF USD. But since we want informations on USD CHF, we simply have to reverse everything that we read here. And since here we can notice that we went from having 14.3k net positions all the way down to having 4k net positions. So we can read here that from an institutional perspective, hedge funds are shifting to the negative side of the CHF USD. This actually means that they're shifting to the positive side of USD CHF, because as we just said, we simply have to invert it. So we can clearly see here that the CHF is getting weak from an institutional perspective, reaching 11k short positions and 16k longs from the 23 that we had here, meaning that we have seen an increase of the short positions from 8k to 11k and a decrease of the long positions from 23 to 16k on the CHF USD, meaning that on USD CHF, hedge funds are adding longs and closing shorts during this move to the downside, meaning that we can definitely expect the market to provide a move to the upside. Now, before starting this impulse, the last time that the market went to the downside was with this red candle here, meaning that this red candle is actually quite strong demand, as we have already identified on the weekly time frame. And we have approached this demand area with an overextended M pattern, meaning that we can easily expect the market to reject this area to the upside. So how we will be approaching this potential longing opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily time frames, those are the best time frames for the directional aspect of the market. But when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday time frames. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from a 4-hour and lower bearish market as we have right now to a 4-hour and lower bullish market. And as soon as the market will shift from a bearish to a bullish market, at that point we will be adding USDCHF to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to retrace at least to the 0.32 of the Fibonacci taken on this daily impulse. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering all your questions every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.